So ladies and gentlemen, welcome to the new series of webinars organized by the Digital Markets Competition Forum initiatives at the Copenhagen Business School. As many of you who have attended past events might know, the forum is an open platform indeed to bridge academic research and practice with the objective to foster a progressive debate on the role of digital platforms in the economy and the new competitive forces in digital markets. Today's webinar will focus on tipping in digital markets. We want to dig deeper into the phenomenon of market convergence over one technology or few, and the potential for a company to gain an entrenched position hard to unsettle by competitors. Now, the presumption in the general debate and behind recent regulatory initiatives, such as the by now famous Digital Markets Act of the EU, seems to be that tipping is a given feature of digital markets, primarily motivated on the ground of network effects dynamics that digital platforms can leverage to grow their influence and entrench their market position. This might motivate the need for the so-called ex-ante intervention, rules that needs to apply to block the possible effect of a competitive action before it takes hold, rather than intervening ex post to correct it, as it is with current regulatory frameworks. Now, this approach leaves open a number of questions, starting with the definition and identification of tipping situations. What do we mean? And thus the criteria to adopt to decide if and when to intervene to break tipping or possible tipping, and how to intervene. Now, tipping can be broadly understood as a situation in which given technology becomes more efficient or more valuable to users, the larger the number of people adopting and using it, which leads one technology to become dominant and capture most of it, right? Fundamentally, it relates to economies of scale, either in supply or in demand, and sometimes both. And notoriously is the case for utility and technological standards, where replication in physical infrastructures might not make much economic sense. But in the context of digital, the concept becomes a bit fussier and harder to grasp in its essence. Digital platforms notoriously have no physical infrastructures. The technology can serve multiple purposes and user needs and cut across several distinct markets. So the notion of the market also becomes a challenging one. Fundamentally, the economics of digital are largely shaped by economies of scope, not just scale. And this calls for revisiting the concept of tipping if we were to move past the scaffolding of political rhetoric and more fully understand the dynamics of competition in digital markets and the potential sources of distortion. So today's webinar is precisely about that. We will first discuss tipping, what it is and to what extent it applies to digital context. And in the second part, we will address the so what question, discussing what to do now that we have a proposal of regulation for the EU on digital markets that goes in a specific direction. And I'm fortunate to have an exceptional panel of speakers. David Nordstrom, expert economist from the Swedish Competition Authority, who will share with us besides their own experience, also a study they have recently conducted on the topic. Aija Leiponen, professor of strategy and business economics at the University of Cornell, who has done extensive work on technological standards and interoperability. Martin Peitz, professor of economics at the University of Mannheim, who has done interesting work on the economics of platform and more recently also on data. Tobias Kretschmer, professor of management at the Ludwig Maximilians Universität of Munich, who has done work on tech standards, platforms, and also ecosystems. And Jacques Kremer, who will join us later, professor of economics at Toulouse School of Economics, and author, among other things, on one of the key reports for the EU Commission on Digital Markets. So I thank you all the speakers for joining the panel today, and also for you joining us in this conversation. And please use the chat for posting your question, because we will have also some Q&A at the end. But with no further ado, I give the floor to David, who will present the findings of their inquiry on tipping, and then discuss a bit some of the opening statements. So, David, the floor is yours.
Thank you very much, Carmelo, and thanks to you and DMC Forum for inviting me to this very interesting topic and panel. So, as Carmelo already mentioned, I plan to sort of focus my few minutes here on some of the results which we found in our recently conducted sector inquiry into the competition on digital platform markets in Sweden. One of the topics we looked into there was the market power of platforms, and one of sort of the issues we looked into under that sort of is sort of this process on how our platform can gain market power, and their tipping is sort of a crucial element that is often lifted in various reports that have been published over the last years. So this was an interesting topic for us. We also saw in the initial consultation we had of our study that a lot of business users and users of platforms seem to have the idea that some platforms were indeed difficult to opt out from, that they had some sort of market power. So we tried to investigate empirically sort of what can lead to tipping, and sort of do we see risks for markets tipping in Sweden where digital platforms act. What we did really was look at a number of factors that are usually attributed as factors driving tipping in markets. So for example, we looked into network effects, data-driven competitive effects, and also the extent of parallel use of platforms or multi-homing. And in short, what we found was that we see that the risks of markets tipping tend to vary quite a lot from market to market. This is due to a number of frictions in these islanding factors. So, for example, when we looked at network effects, we noted that on all these markets that we looked at, there were indirect network effects prevalent. So, sort of the business users on the platform value the participation of consumers and vice versa. But that in itself did not really seem as a sufficient condition for there to be tipping. We know that various frictions, for example, there seem to be asymmetries between the various sides. So, for example, while business users typically value number of consumers, on the other side, consumers often value the type of business user. Also, another important factor was that when you look at sort of these platforms, I mean, typically they serve a market, they provide some sort of distribution mechanism, and that means you often have to look at the underlying market, and also there you can have factors leading to various frictions. For example, there might be local competition in some of these markets, and there might also be capacity constraints on part of the business users, which sort of tend to cap the network effects. As I mentioned, we looked into other factors as well. I will not go into them right here, I think, but just shortly to touch on multi-homing, which we looked into. That is usually lifted as sort of a remedy against market tipping and concentration. We saw that seemed to be rather prevalent. However, there are some instances when users tend to focus or concentrate at one platform. So, for example, when you have a high degree of differentiation in the market, which tended to be the case in some markets, also when you have fixed costs present, and also sometimes when the platform itself forms part of an ecosystem where users might not be willing or simply cannot change or depart from one part of this ecosystem without leaving the ecosystem in total. So we think that I mean the risks of tipping vary. However, we see that a lot of these sort of effects leading to tipping are channeled through the parallel use, or rather non-parallel use, of users. So we see that there can be rather big risks on digital platform markets, that platforms that tend to lock in users to sort of increase network effects, etc. And in those cases, I think we as a competition authority, which we have some experience from as well, we need to act fast in those cases. I think I'm going to stop there, actually. And I'd like to get back to the subject later.
Thank you, David. This provides already, some of the elements that we will touch upon later on, and also, I guess, the other speakers will touch upon. And speaking of which, Martin, you want to provide us your quick overview on the matter?
Yes, I think the development in Sweden is very interesting, because in a way it is mirrored in what is happening in some other member states in the EU, and of course also countries outside the EU, what is going on in the UK, for example, and what has been happening at the European level, where, for those who are not familiar, I want to remind you that the Commission last summer had the aim to introduce a powerful new competition tool, and part of that was to deal with what they call structural risks for competition. And what they meant by that is that there are certain market characteristics, such as network and scale effects, lack of multi-homing and lock-in effects. And here I'm reading from their document, coupled with the conduct of the companies operating in those markets, can create a threat to competition. This is particularly the case for markets at risk of tipping, which is our issue today. The risk to competition arises through the creation of powerful market players with an entrenched market and or gatekeeper position. There are all those words in there, which we probably want to talk about: gatekeeper, entrenched position, and tipping. And well, these could be prevented by early intervention. So that's what we're talking about, the early. So it's kind of the ex-ante ex-post is perhaps a bit too black and white. So the question is when to intervene. How has the market, what has to be the position of the market to think that we have clear indications of tipping of a sort which we think is actually detrimental to users, where users can be defined differently. We can look at final consumers, but we can also include some other types of users. Now, I think one of the markets or players is easy to look at from a viewpoint of tipping, and that's Google search, which has been going on for a while, where we have seen really an entrenched position, meaning that Google has enjoyed a dominant market position for a long time, at least for certain types of services it is offering. So I think there one also has to be a bit more careful. You cannot say that Google search is dominating all types of search, but at least certain types of search. And what has been going on there, so I think there are network effects which are understood, which are driven by data. The story about multi-sided markets, multi-sided platforms is not super useful to understand I think the first order effects of Google search, as with many other of the big platforms, because they are all driven by some version of direct network effects. And how this, at least what I would call direct network effects. And here, why is Google search so strong? Well, it started off with, well, it wasn't the first, but I mean, when it became dominant, it had a superior quality, and this was then fed by data, and with their algorithmic learning, there was a feedback effect which continued to provide the upper hand to Google. And overall, that's, at least at first view, that's good news for consumers. So that's not clear why there's necessarily a competition concern. Now, the competition concern may arise by the use of data for kind of, if you want, auxiliary services Google is providing for a different group, namely the advertisers. And what Google allowed is for very targeted advertising. And also there, I guess it's not yet clear, at least a priori, it's completely unclear whether that's actually bad or good for consumers. There are different countervailing effects. In the end, that's of course an empirical question, which may differ the period one is looking at, and may even differ across different categories of services and products and across different consumer groups. And then there's another element which in a way has also something to do with entrenchment, which are cross-market effects, which allows one firm to expand into other markets because of a superiority of the product they're offering, but with the threat of removing innovative pressure in the long term from potential competitors. So together with Massimo Motta, I was the author of The Economist's report regarding this new competition tool. And and we talked about tipping there, but I think with my introduction, I actually used most of my time. Is that right, Carmelo? And perhaps I can return to our understanding of tipping later on. Is that a good idea to stop now, or should I continue a little bit more?
I think, we can return to this later when we go for the second round, if you like. So that
well, I offer that so that you can.
It was
so that the market doesn't tip yet. Okay. Good.
Exactly. So thanks a lot, Marty, for expanding on the range of different elements here that form the constellations of tipping. And I guess that Tobias will have more to add to this, particularly also in comparison maybe to digital and more traditional technologies of the past.
Fantastic. Well, thanks very much, Carmelo, for putting this on and for inviting me to speak. This is a blast from the past. I just mentioned that I had a paper on tipping in my PhD thesis. That's turning 20 this year. And in 2004, I wrote a review in the Journal of Industry, Competition and Trade with Heli Koski, which in itself wasn't so important. But what was actually very important is that Pierre Gibault, who was then a senior lecturer at Essex, now of course is a chief economist at the European Commission, he wrote a comment in which he managed to not comment on our paper at all, but he gave a really nice algorithm on when to intervene in network industries. And I thought that was really interesting and very much ahead of its time, because what he basically talked about was multi-homing, network effects, it was consumer heterogeneity and all these things, basically giving a list of when there should be some intervention. I thought that was quite interesting. It was nice to revisit that. So now, how does this look like 17 years later and looking at platforms instead of utilities? Well, so tipping, the way I understand it, are basically de facto standardized markets where there is no viable alternative to the dominant technology. This will typically come because there are increasing returns, either on the supply side, which is what we talk about a lot when we talk about utilities like electricity, even telecoms, where you have a big infrastructure investment that, of course, then is subject to economies of scale, or, of course, on the demand side, which is when we're talking about network effects. Now, interestingly, with increasing returns, on the one hand, more concentrated markets will maximize welfare to some extent because there are network effects, and the more consumers you have on a single standard, the higher network effects. On the other hand, of course, with increasing returns, the tipping becomes more likely, and therefore you get all these potential problems of too powerful firms and dominance and so on. So it's kind of an interesting thing to think about, or aspect to think about. And so the question I'd like to pose is if there's good tipping and there's bad tipping, and which of those we're likely to see on platforms. So bad tipping is basically defined by the consequences of what happens to a standardized market or to a de facto standardized market. And the way I think about it is that market tipping is bad if it's hard to reverse, so if it's an entrenched position, as Martin has pointed out, if it allows players to exert excessive market power, if you can use the dominance in one market to export it to other markets, and if in a static sense it restricts choice and variety, and in a dynamic sense it restricts innovation. So when we think about platforms in this context, reversibility is, I think, mainly connected to the progress in terms of technology, but also in terms of service innovation, and to shifts in consumer preferences. So I don't know how many of you remember MySpace. I spent days, weeks on MySpace. Was very excited about this. So that was quite a big thing at the time. Of course, within a few years, it was completely replaced. I actually just looked it up. So Facebook and YouTube were the two technologies that basically took away most of the user eyeballs from MySpace. And the reason was that new consumers came along, and new consumers had different preferences, which was matched with a new service, a new technology that came about. So the reversal of dominance came not from within that market, but rather from a new demographic and a new service that came out of this. Now, thinking of market power, as Aya and I and Melissa Schilling and Granita Vasudeva show in a paper, most of the value of a platform comes from its ecosystem around it. So within a platform, that implies that complementers will still have to receive enough incentives to actually produce interesting, novel, high-quality content, which sort of limits the platform owner's ability to capture value, or to capture too much value of that dominant position. So there's always, when we think about an ecosystem, there's always a negotiation going on within that ecosystem on top of competition between different ecosystems. Add to that complementers are, of course, free-ish agents. So the threat of leaving the platform is actually a real one. However, I think it's different in this case on the other side, namely on the consumer side. Here, I think platforms can become de facto gatekeepers if you're a consumer who's been collecting friends and collecting connections on a particular social network, then that's going to keep you to that platform for a long time. And I think that's an important issue, which creates some sort of asymmetry from the complementer side to the user side, to the consumer side, so to speak. And I think here Aya is going to talk about multi-homing and the possibility of multi-homing, which of course may serve to mitigate that to some extent. Now, exporting dominance, taking dominance in one sector and extending it has always happened, but I think it's especially important in an ecosystem where functions, of course, are interlinked, and you do have, or you may have, economies of scope in data, as Martin has implied. So you may be able to use that dominant position. Of course, this may take the form of platform owners introducing so-called first-party complements. So in other words, going into the complementer market with their own offerings. And this can be done on the one hand to exert market power, so to harvest in a sense, or to build a market, to build a particular market niche, which I would, that's generally considered a good thing. I think there's a distinction in that if you're facing a strong incumbent trying to, and you're trying to export that dominance, that's traditionally not been particularly successful. I mean, think of Google Plus, which was one of the most powerful platforms in the world, trying to expand into a market that was already highly occupied by other strong players. That has traditionally not been particularly successful. I think in small entering markets where there are small incumbents, that has often been successful. Finally, to what extent is innovation and choice and variety restricted from a market that has tipped, or in a market that has tipped? I think innovation in ecosystems comes from multiple sources, not just a platform owner as such. And there, I think there's a certain degree of incentive compatibility, because a platform owner will also benefit from lively innovation on the complement side. So that's I think one aspect. Variety between platforms is often considered not actually all that important. So often it's not the technology, the underlying technology of a platform that makes the difference, but rather the users and the complements that are available. So to summarize, I think that platforms do have a fairly strong, or do show fairly strong forces that favor concentration. I think there's probably a slightly higher chance of good tipping happening. So the idea that you gather on a single platform to maximize network effects. Some of the dangers of bad tipping seem maybe mitigated. I would argue, though, that the consumer-facing side is more prone to bad tipping and sort of this idea of having a few outside options. So theoretically, we could see creative destruction of successive monopolies in particular segments. Realistically or empirically, we do feel that, or we do see that platform dominance tends to be quite persistent or entrenched, as Martin has pointed out, of course. So I think kind of jumping the gun a bit for the second part, but I think distinguishing between good and bad tipping is an important aspect, and of course exploring why this platform dominance, despite everything, seems to be quite persistent is a second direction that we should be looking at. So thanks very much.
Terrific, Tobias. Thanks very much. So I think that maybe you provide, sort of the framework, the categorization to explore this on the good and bad tipping. So thanks for giving this to us as well. So I was called in with interoperability, multihoming. Not sure if she's going to speak about that. I guess so. But Aya, the floor is yours.
Thank you. I'll be delighted to talk about those topics. So Tobias, Martin, David set the stage really well for what are we talking about and what are the issues here. And I'm going to kind of riff off of the question of, is tipping bad and when is it bad? And what can be done about it? And so my answer to is tipping bad is maybe sometimes tipping doesn't matter. One platform that is quite dominant in its space, but we never talk about in this context, is Twitter. They just don't seem to do anything. They just provide this platform for a lot of speech to go out, but nobody seems to care. But we care a lot about Facebook. And so I think the key distinction is what Tobias was talking about, market power. So what kind of market power and what can the platform provider do with that power in adjacent markets or within the market that they're operating in? And so can they exploit users' data in some way that's harmful for someone, the users or someone else? Can they prevent multi-homing? Can they buy off innovative competitors and all those kinds of things that we're concerned about? How do they misuse that market power? And so I think the bad tipping comes in when some of these type of anti-competitive, anti-consumer conduct is being observed, and so what to do about it. And a couple of the things that already came up is really focusing on the data use, monitoring that, enforcing some rules about how data can be used, preventing those killer acquisitions and killing off competition, managing multi-homing and explicitly making sure that that's allowed by the platform, the ecosystem participants. And then interoperability, I want to spend a couple of minutes on that just to kind of dig into some options there. So another blast from the past. Tobias and I have looked at these things for some time, and we both started from older types of platforms. So my initial case study was in, and still continues in, wireless telecommunications. And so we've sort of seen some of this movie before. if you think about the 2G, the first digital systems of wireless telecommunication, we had a kind of a systems competition between what was called CDMA and GSM or TDMA, and how that competition sort of played out. And I think we can learn a lot from that particular market and case study. It didn't work out well for CDMA. It was a kind of a bad situation for consumers, particularly in the US, when people didn't adopt because there was that sort of conflict between the platforms and the networks, and so that non-tipping can be a bad situation for consumers as well. The market did end up tipping, but that's a very highly regulated market, and that actually worked out pretty well for consumers in the end. But what we can learn about this is the next generations, 3G, 4G, 5G, have been actually set. The market has been sort of designed through a global collective effort to open it up through global standardization. And so anticipatory standards for interoperability between different kinds of technologies and different kinds of services in the system can do a lot to sort of facilitate competition in a network market. And so what does that mean for our current platform debacles? I think there could be both sort of remedies for current situation and also anticipatory action for preventing tipping or dominant players from arising in the first place. I think in terms of remedies, one could imagine that there's policy effort to explicitly enable and facilitate creation of technologies that allow interoperability between networks or services. So that could take the form of some kind of bridging services, bridging technologies. You can imagine, Tobias mentioned MySpace, but I want to introduce a social network that's called MyFace. And then it has a competitor rival that's called Your Face. And if I'm a consumer, I'm in MyFace. I don't want to go and do my social networking there and then also on Your Face. But if there was a third-party service that would allow me to post to both and read newsfeed from both in one place, I could sort of spread my great cat pictures on both networks simultaneously, and that would not be an extra cost for me as a consumer to multi-home. But right now, the third-party service cannot exist because these platforms can block that kind of scraping. So we could think about anti-scraping technologies and regulations as one way of opening up the not just data portability, this goes beyond data portability, actually allowing services that can interface between competing networks, and in that way, opening up the competitive kind of setup a little bit, making it easier for consumers to not get locked in and be kind of mobile between networks. So I'll stop there, and we can return to these issues later. Thank you.
Thank you. I mean, so these are all, very important points, and there's been also the past, a lot of debate about this, and we'll return to it certainly on interoperability, how you ensure this, and if we push competition, does that diminish the possibility of innovation? So, and then Toby also touched on this later. I would like to go basically on for the second round, and maybe starting with Martin, and you go back, with your hat of committee expert on the point you were about to throw to us earlier, and then maybe go back to David as if you want to add, to some of the points that have been raised so far.
Thanks. I didn't know that I get already now my time. Great. I would like to add a few things on mostly what Toby said, but also what Aya added. So I think it's interesting to think about what is, say low risk and high risk. Yeah, instead of talking about good and bad, let's talk about low risk and high risk. And so some of the examples where some platforms were replaced in the past were clearly low risk environments because these were periods of strong user growth. And therefore, some people say always using these old examples may have a bad point today. In some of those services, at least where there is a lot of market penetration, there isn't that much user growth anymore. So I think that's the first observation. Therefore, I appreciate always the MySpace example, but it just doesn't tell us that Facebook will be replaced tomorrow, and we just don't know it yet. So it might well not be the case. So the probabilities are somewhat different. But apart from growth, and I think Toby was also talking about that, I think it's very important to think about changing preferences. So even in markets where there isn't much user growth, if they are quickly changing preferences and these preference changes are correlated across users, then also that's a low risk environment. Yeah? And this can explain the success of some of the platforms currently, say TikTok, or you can even think about a few years ago, this, think of it as a platform, Pokemon Go. And people really thought, I mean, this is kind of the big thing, but well, it was driven by some kind of fads about certain usage aspects. And therefore, I think these are environments where I would say these are low risk environments, that there is no prolonged tipping. There may be some high risk areas. High risk areas are there where when you grow a new platform and you compete against an incumbent platform, you get a negative selection of users. And this happens, I think, in a number of platforms which have well-functioning rating systems. And they are the ones who are going to leave a system are typically the ones which are the less attractive ones. So that means a new platform will have a hard time because it starts with a pretty bad selection of users. So that I would consider a high risk environment. And of course, that's endogenous because it depended on what the incumbent platform has been doing. So we are of course happy that they have a well-functioning rating system. But if they only kick out the real lemons, that means also that's the real lemons which are the first ones which go to the new platform. Okay, so you see that there can be some problems. And one aspect, I think, which in the discussion is often a bit overlooked, it depends very much on the network structure. Those who are working in theory on this, and even some in empirics, and we just use some aggregates. No, but we have to take a closer look at the network structure to understand whether we are in a low risk or high risk environment. So for example, some social networks may be actually rather vulnerable because they may not want to interact with a lot of people, just with a close set of friends. And if that's the case, if those network effects are rather local, then actually this environment doesn't lead to prolonged tipping. If there's a better service, it doesn't need the coordination of all users. It just needs the coordination of some subsets of users. And that means that an incumbent position is actually rather fragile. I could continue with a few going more on the innovation dimension, but I think I used my time. And if I have another chance and if there's need, I'm happy to continue.
Sure, thanks, Martin. We'll go into discussion mode now, but before I would like to welcome Jacques Kramer, who has joined us, and then give the floor to Jacques to have some opening remarks on what he thinks about, the problem on tipping in digital markets. Thank you, Jacques, and welcome again.
Thank you very much. I'm sorry to arrive late, and that makes it a little bit difficult to do introductory remarks because I don't really know what was said before. But I mean, it's fantastic to be here because there's a great other participants, and I will try to do a good job because I would really like to do this in Copenhagen, and I hope that by 2025 we'll all be vaccinated in Europe, and I'll get an invitation to Copenhagen. Last time I was there, I was given a very good box of chocolate. I want to remind you, Carmelo, that I would like another box of Danish chocolate. Now, there are also good reasons not to participate. One is I knew I had to arrive late. I had another meeting. And the second one is I really cannot stand the term tipping markets. I think it's a really very, very bad terminology. And for two reasons. First, there is no tipping. And secondly, there is what we're speaking about is not tipping. And actually, the discussion I just heard was a clear example of this. And secondly, there are no markets. So I don't really propose that we stop using the terminology because it's too entrenched. But explaining why I think it's so misleading may help make the economic analysis of the situations a bit more rigorous. So I looked at the Oxford Dictionary, and it gives the following definition of to tip: overbalance or cause to overbalance so as to fall or turn over. So I can't understand the definition, but they give the example: the hay caught fire when the candle tipped over. Okay, but actually what we're thinking about is situations which are too stable because of a combination of network effects, which Martin was discussing, of increasing return to scale and other things which have been well explained in lots of places. And what we're seeing is that the firm's position will be so entrenched that it will be subject to very little competitive pressure. And actually, in the Swedish study, there is which is very good from what I see from the summary. But it's written that platforms may have incentives to lock their users into their platform in order to shift the balance and tip the market to their advantage. What actually the study is speaking about is a dominant platform which is becoming even more dominant by tipping the market in this direction. But many people, when they think about tipping market, what they think is somebody else will come in and take over all the market. So even here, we've got a problem of are we tipping to the left or to the right? And I think what we are really wanting to speak about is whether or not firms, platforms have positions which are very hard to attack. Okay, so I think that ossified or solidified would be a much better term. Okay, we don't want a dynamic term. What we want is a term which represents, things don't move. Okay? The second thing, and I really hate to raise the topic, is the topic of markets, because there's been so many discussions about markets in two-sided platform. And Martin and I have discussed that already, and we don't agree, and I'm right and he's wrong. But in markets, the markets are defined by goods are exchanged through prices, and firms compete through differentiations of products and prices. And for instance, are we really thinking about a market for online marketplaces? I mean, it just doesn't make many sense. So I really think the title of a webinar should have been ossified dominance or solidified dominance. Now, of course, I mean, I think that in terms of marketing, Carmelo, you'd have been much better with taking tipping markets, because I would have been the only one who would have been interested. But I really think that we need to be very careful about the terms we are using, which I think are, kind of putting the wrong things in the. So just one more minute. I believe that there's one thing in the DMA. The DMA is trying to go away from competition terminology, and in particular, you don't have mention of consumer surplus, but we have fairness and contestability. So just let me take one quick word about fairness and the DMA. Okay, one and the why ossified dominance is important for this. Okay, one of the defenses of the fact that we let firms have monopoly power is because if you have lots of profits, that encourages innovation. But if dominance is very stable, okay, becomes ossified, then a little bit of innovation, a little bit of comparative advantage at the beginning of a technology, a type of platform, translate into very long-run dominance and very large profits, and profits which are in some sense too large compared to what we need in order to induce innovation. And hence it's the question of fairness of how much profit should we leave to innovators, okay, has to be changed if we think about this in this direction, and we should be less worried about being unfair to new innovators in those type of markets. Now, there's much more to say about the definition of fairness in the DMA and how we should use it as we go forward. But I will only speak about this when I'm invited in Copenhagen. So back to you.
Okay, thank you, Jacques. I mean, I'm taking notes on chocolates and invitations. So you are, and I'm taking the opportunity so that, now it's a binding for you. You are going to be invited. You are invited for the event of October that we're going to have in Copenhagen. So, mark your calendar. You will receive lots of chocolates and everything.
Jacques may lose his market power in the meantime.
Oh. Wait, no, please preserve it. But thanks for the points, and so we are, taking, right? I mean, the words and the terminology, which is an important point that you raise here, that has been used, right? And then, as I was putting in my also remarks, it's probably abuse, right, in the common parlance. And I think that it's important, though, to clarify, but there are some, more than just, terminological elements here. There are fundamental points behind it. And, you raise an important one, markets. So we talk about digital markets, right? And you put it there that that's not a relevant reference point anymore, right? Just for one reason, right? That this platforms cuts across markets. So how do we classify? So I was tempted to put a poll out there for our attendee to ask about just pick a random platform and ask which market the platform was playing. And then, I guess that, if I ask about Amazon, the answer would be completely wrong, and no one will guess what the right market is, in fact. But my question, and to you and all the panelists, of course, it seems that, when we speak about tipping, or when regulators or when we speak about tipping problems, right, in digital markets, we all mean entrenchment, right? We all mean basically positions that the firm has gained for any reason. And then, I would like also to debate that, because if it's just coming from competition, then it's hard to unsettle by competitors, right? Because there are some barriers that basically emerge, and it's hard to unsettle that position, right? So that basically becomes, the ossified, position that you mentioned before. Now, so is tipping the same as entrenchment? And I guess that, the answer here from the panelists would be probably not. And we need to speak probably about, entrenchment. And if the markets, right, I mean, are not anymore the good reference point where to assess this entrenchment, right? What is that we're going to look at, right? If not markets, what is that we're going to examine? So for this entrenchment, this, will then also introduce a problem, elements for the debate that we'll have later on, right? So how do we intervene, and when we should intervene? So if it's not market, is position, and how do we get to this structural position, right? I mean, this competitive domain.
Sorry.
Yeah, Jacques.
I hope you're asking this question to somebody else, because it's very difficult. No, I mean, okay. The problem with tipping is more of a question that. So, for instance, we take MySpace and Facebook. Okay, so yes, there was tipping. Okay, and you can find other examples of, platforms which replace other platforms, and so on. But the issue is not so much can we find examples of replacement of platforms by other platforms. The problem is, do we find that the competitive position of platforms who are providing a service is so stable that we think that they make profits which are incommensurate with the amount of innovation they brought, and B, that it creates problems in terms of innovation, possibilities of others to provide new technologies and so on. So it's not, of course, there is tipping, okay, but it's more that there is untipping, okay, and I think that if we use the term tipping, we kind of concentrate the discussion of can we find cases of tipping, which is not really the issue. The issue is, can we find cases in which platforms are have got such a stable position, but we need to think of other ways of regulating them, other ways of doing competition policy and so on. Okay, so it's more the focus. Okay, and in markets, again, I mean, the problem is, can we use a term like monopoly to speak about Facebook? I mean, I saw there's in the Q&A somebody asked a question, but there is Facebook really a monopoly? There is competition. There is, you know, Clubhouse. There is TikTok, and so on. Well, first, you know, people have said that about Facebook for a number of years now, and you know, young people don't use Facebook, but young people don't say young. They become older, and then they begin using Facebook. So it's there's a little bit of a problem here. And then the problem is not so much whether or not Facebook is what is a market in which we're going to say that Facebook has a monopoly? Is that there's going to be Facebook and other networks by which people communicate. But as Facebook a position which is very, very stable, and a group of consumers who are going to use it repeatedly in ways which are very, very different from what happens in normal markets. And if it is, then we need to take this into account when we are discussing public policy. And it doesn't mean that Facebook is bad or good or anything like this, but it's a very different type of dominance than would be the dominance, for instance, of IBM when it had, you know, a long time ago, because even IBM would be a difficult case, but which was really which was based in great part on continuing innovation.
Thank you. So you want to say something?
I wanted to jump in maybe at this point, because I think if you have Facebook already, it's out there, then what should we do about it? Or should we do anything about it? And I think that conversation has to be driven less by is it entrenched or not, and more by is there some harm to innovators, harm to consumers, or explicit sort of direct harm to rivals that is anti-competitive. And so I think that's a more helpful way for regulators to start then chipping at the question of what can we do about that, and how are consumers harmed by Facebook? Well, I'm a user, and I'm not really harmed by it directly and unknowingly, but there's all that kind of data market that's going on behind the scenes that may be harming me now or in the future in ways that I don't understand. So maybe we should look into what are the data practices of Facebook and then address those directly and specifically. Maybe somebody mentioned, Martina mentioned Snapchat as a potential replacement. Well, when Snapchat started becoming more popular, soon enough, Facebook basically replicates all of Snapchat in Instagram. And so there's that, there's an innovation that they just kind of port into their own services. Is that harming consumers? Not necessarily. There was innovation. It was adopted in the marketplace. That's kind of good. If they had bought Snapchat and killed it and killed the innovation, that would have been bad. And so then it becomes sort of a case-by-case discussion of what practices and what conduct is harmful to whom, and how can we alleviate that. But I want to get back to the interoperability story. Jan's question is an excellent one on, well, should we then allow or force interoperability between, say, Facebook and Snapchat or TikTok or whatever it is? And I don't think those networks necessarily should be forced to talk to each other directly, but I think we could allow or force them to allow third parties to lift data from the networks on consumers, at consumers' permission, and then do something, form a different service that does kind of build a bridge between those. And that could prevent the tipping to even happening at all in some of these markets that have strong network effects. Thanks.
Can I ask you a question about this, please? How do you do this with respecting privacy? Because my data on Facebook is also the data of my friends. And, if in order to make interoperable the fact that I'm your friend both on Facebook and on TikTok is something which is already very complicated from a privacy, it would seem to me, from a privacy viewpoint.
That's a good point about the fenced feed and information, but I could definitely, as a consumer, I could choose to use a third-party service to post in all the networks and places where I want to post. If I choose to allow my data be lifted from these places and posted from the third party. But then what to do about the newsfeed? Could you really aggregate the newsfeed? And would you have to only aggregate the newsfeed of friends who have also agreed to be part of it? That will get a little bit more complicated, I agree.
Couple of questions of this. One that just came to my mind is on this then a problem of opening up to a third sort of monopoly, so to speak, right? I mean, so to the possibility that third parties, service that put this interface act as aggregators of the aggregators, right? So you have a sort of a meta aggregator, and this is, I'm putting there, right? Because then markets can move very quickly. Then you can, they can soon become, from a remedy, they can soon become the next, big problem. And then, who's gonna control the controller, right? And the second relates, to point that Tobias was mentioning before on, this trade-off between innovation and competition that in some cases exists. So if I'm allowed then to post, right, in a standardized format or in a standardized way across, any platform, for instance, does it make sense anymore that, for instance, TikTok or Clubhouse or even Instagram, which is completely different than Facebook, just disregard the fact that they belong to the same company, but the fact that, there is not much of already interoperability between the two, it speaks also to the fact that they are used in a totally different ways, right? For different marketing purposes, you craft and create the message in a very different way. So to speak, there is, what we will call in some of the papers, right? There's a co-specialization that you make, to the platform, which is part of the innovation, right? And the part of the differentiation. So if you rely on this interoperable things, are we killing part of this? Or said in other words, are they effective, provided that then users will in any case make the investment to just go to one platform and build for that? And then Toby also, please, step in if you want on this.
I was actually going to make a slightly different point based on responding to Jacques' comment on what is a market and kind of where do we talk, or what's the right level to talk about dominance. And I think I can see going in two directions. On the one hand, we can talk about specific transactions, and these specific transactions may be dominated by a single service or a single player, right? So if I talk about short messaging services, for example, then there might be one dominant player that really commands most of the share here. I think the other aspect, and that's a much higher level of aggregation, is to talk about literally time spent by consumers, right? Because I would guess that advertisers' willingness to pay is strongly correlated to the time that people actually spend on a particular application on a particular platform. And so there, it might not even be necessary to know what people do on Facebook or on other or on Twitter, let's say. If they spend a lot of time there, then that means for advertisers, the more time is spent there, the more I'm drawn to that particular service. And I think that's a practically relevant way of thinking about dominance, whereas the transaction level is something that we would think about maybe more theoretically, maybe more in terms of competition policy. At least my
May I quickly intervene? I think it's useful to think of it, but I would be much more careful, Toby, because I mean, attention to what? People are in very different states of mind. So I do think it's useful. And I mean, I've written a report on attention markets with the word market in there, Jacques. But attention is something multidimensional. So you have to get people in the right state of mind. And therefore it's, I find the singular a bit preoccupying, but indeed, as we always should do, only in digital markets is even less straightforward than in traditional markets. We often don't have a good understanding of what the substitution possibilities are. What's the next best thing for somebody who is not on a particular platform? Perhaps not being on Facebook means that I will play Minecraft or go to some other gaming platform. And if that's the case, and this is actually in terms of attention, the next best substitute. And then the question is whether the kind of players, actors on the other side can also reach those users through these alternative means. So I think that's very important, and therefore I think these quest for interoperability, data sharing, and so on. It's nice to think about, but it's super complex, because at least when you have multiple audiences, it will trigger a change of behavior by the other audiences. So, for example, the incentive to multi-home depends very much on whether on the other side there is interoperability or not. And therefore, what we have to see is that many of those interventions, when we think about them, they will not just have some allocative effects, they will have important redistributional effects. And then it depends very much on what we are actually trying to remedy. So what is actually the concern we are talking about? And currently, I think the problem is that we don't even know what is exactly the harm. We do have it, I think, in some cases when it's excessive pricing. So these are kind of rather walled gardens. So you can argue Apple, I mean, their price does play a prominent role for many players, but then you have others where this is not a relevant variable. And then we talk about the issue that Jacques was mentioning. It's about perceived privacy infringements or even which is related, but which is pretty obvious are security threats. Yeah, I have my bank details get hacked and things like that. And we are talking about possible innovation harm where it's extremely difficult to construct the counterfactual. But I think so that the challenges are there, and I guess David could tell us how to do it.
Exactly. I was also very curious, I mean, to learn, David, what's your reaction to this first, points there? I mean, how do you proceed, in detecting some of this?
Yes, there are many, a lot of interesting aspects that are discussed here. If I can go back a bit, perhaps, what Jacques mentioned about tipping and using this word, I think perhaps tipping, I think of it at least as more of this process, and then Tobias mentioned this about gatekeepers, and I think one can distinguish sort of one way to think of it is before and after tipping, and what might be our concerns there. So we've seen in the cases we've had, and I also think it's important here when you think about platforms, you tend to think about Google, Facebook, etc. But let's remember there are a lot of platforms these days with everything being very digital. We've seen in a few instances where we've had concerns about very new emerging markets, where sort of platforms have all of a sudden come in as a new way of distribution, and we've seen the use of exclusivity clauses applied towards business users, and you might think of that as a platform sort of trying to tip the market, but I mean, what we would be concerned as a competition authority is that might pose a risk for foreclosure and foreclosing other platforms from emerging in the market. so that is something we've seen in the past and are concerned about if that happens. And I mean, here we'll have some tools, and we think it's important to act quickly. In these cases, we have some tools for that. For example, we have interim measures which we've used in the past. There's also the possibility to apply rules on anti-competitive agreements. So one might not also think only of abuse of dominance. And then just a few words on this after tipping, if you can talk about it in that sense. Something we look at in the report, and goes a bit back to this discussion about gatekeepers, and what we are interested in particular is sort of these platforms that play an intermediation role, and whether they can have some sort of intermediation power towards business users. And we think that that's possible for some platforms to have. And the main drivers of that is in particular when sort of the competition on the consumer side is very weak. And typically that can be weak due to, obviously you won't see exclusivity clauses, etc. On the consumer side. It might be due to network effects. It can be various forms of, there's a very sort of big scale here on sort of behavioral nudges, pricing, etc. that can make sort of consumers unwilling to switch platform. In those cases, the platform might be able to exercise that in the contracts it signs with business users. We think one harm that might arise there is pass on, for example. So the business user would pass on higher costs for being on the platforms to consumers. And just a bit there, and in those cases, well, I think our current competition toolbox might not always be the very best at tackling these, as we discussed that quite in length in our report. So, for example, if you have this intermediation power in combination with the vertical integration from a platform, that might be cause for concern.
Okay, thank you. I mean, speaking along these lines, I mean, there are also questions that are posed there, right? That it seems, the question seems to point to what basically this dominant or entrenched position can then allow the platform to do, right? That is more of the concern rather than, do we have a big platform, is it dominant? Yes, who cares, right? I mean, if I get, value from it, why should I care, right? And if that promotes innovation, again, what is the problem with that, right? So why do we want to prevent, right? I mean, tipping. So the question is, maybe also moving towards, the second part now. And so what do we do, right? I mean, with this, whatever is going to be the definition we have, when to intervene, what are the key factors that we can look, I mean, the criteria, right? And where do we intervene, right? So what do we do? Are we just forcing platforms not to grow? Are we, breaking them? Are we forcing them to open up? And, how those certain of those, remedies might actually be remedies, right? Or they might promote basically benefits, right? And counter the harm, if any. So that's my first question. And then the second question is, again, on the detecting point, some of the logics, and that's also embedded into the philosophy, if you want, of motivations of the DMA, is that, is this assumption that because then you have tipping, right, whatever they think about, but, entrenched position, then as a result you have, and I'm reading quote, right here, higher prices, lower quality, as well as less choice and innovation to the detriment of the European consumers. That's written in stones, right, in the DMA. So are we really observing this happening, right, across the board? And a better question maybe would be, when are we more likely to observe this, if any, as a result of entrenchment?
May I just make a small, what I consider clarification, is that it's not really across the board, because the DMA won't apply to a large set of platforms. It will be some very specific ones, and therefore also it's termed in a way it's a regulatory tool, and regulation is always seen as ex ante, but it's ex ante after things have gone wrong in a way. Yeah, so things have gone wrong and now you're regulating, and so in that sense it's not the kind of ex ante which actually tries to go against such a transposition. I think that the idea here rather is to limit the behavior of those firms. They may actually want to, what they may want to do in adjacent markets. So in that sense, it is ex ante, but only for those adjacent markets. Just that as a clarification. I don't have a, your other questions are still all there.
So who wants to go off with this question, Aya?
I actually wanted to raise a couple of harms that are sort of outside of the traditional competition regulators toolkit. Jacques already mentioned fairness, and so using data to create unfair situations for consumers or for whoever parties out there. So you can imagine data being used to exclude people from a market or offering them not offering them access to a market, whatever it is. So fairness is one thing that is not sort of in the antitrust vocabulary. Usually the other one is privacy. So privacy is regulated in a completely different space of legislation, and sometimes people want to bring privacy into the competition discussion. I don't think it fits well there. I think it should be a separate conversation about what are people comfortable with having platforms, how their data can be used and cannot be used. And so that's a conversation where we've made some progress, obviously, with GDPR, and I think that's hopefully eventually coming to some form of federal regulation in the US as well, but it's taking a little longer here, a little bit slow. The third issue I want to raise is just monopolization of information sourcing. And so if you think of Google's, they have tremendous power in kind of shifting and steering conversations. And so if they tweak search in a particular way without us knowing or without us being aware of what the algorithm is doing, that some of those, usually we assume that Google is doing no harm, but maybe, who knows, in some future date, they might be actually wanting to do some kind of harm or benefit from the search directions in ways that that consumers or societies more broadly could be harmed from withholding some information or spreading some other information that's actually not beneficial. So those are I think the big issues that kind of we have to bring into the debate, but it's sort of outside of the antitrust regulation.
Thank you. So Martin, if it doesn't work as an ex ante, right? So how do we stop this monopolization, for instance, of Google now, right? So is it that we need to accept, the possible trade-off of loss, maybe, of what the platforms could do with aggregation of data, and therefore stop them to do it now? And is this gonna fix the problem, or is it just gonna consolidate what we have so far, right? So Jacques also, maybe also find even more the state of the art.
Okay, I think the problem with the sentence which you read was it leads to higher prices, but to higher prices than what?
Exactly.
There is no, I don't know what we are speaking about when we say that. So I don't think and that comes back to some of the comments of Aja earlier. I don't think the issue is to know whether Facebook is good or bad for consumers. Clearly, Facebook is good for consumers. People are using it, are getting lots of information and so on. The issue is, I think the issue is twofold. First, it's so big and so important, and it's a bit like what also you were saying about Google. I mean, Google has such an importance in terms of what information is visible on the web, but there is going to be regulation. Okay, we can discuss forever whether it's a good thing or not. There is going to be regulation. Okay, so the problem then is, how do we go and organize it so that it does as much good as possible and as little harm as possible. Okay. And one thing I'm getting more and more convinced about, okay, I'm not entirely sure yet, but the discussions we are having here is what is good behavior, what is bad behavior, are incredibly difficult in the abstract, okay, because we don't really know how to describe the type of practices which we don't know how to describe a practice. We don't know how to have a theory of whether that practice is generally good or not, and so on. And that's why I must admit I'm becoming more and more convinced that the British proposal of having, you know, haute couture type of regulation, very specific to the firms through the code of conduct, is much more promising than the DMA way of doing things, because the DMA, in some senses, this practice is forbidden or allowed, but we really don't understand very well what the practice means, and we are not targeting it to the. I think it's very hard to determine, you know, whether it's put at the right level. Now, I understand that, you know, the British solution might not have been possible in Europe for legal reasons, and I'm not competent enough to discuss this. But I think we should try, you know, in the implementation of a DMA at least, to try to make it, you know, as specific as possible and with as much dialogue as possible between the regulator and the platform. It doesn't mean that it cannot be strong, but it really has to be targeted to make sure that we don't get the unintended bad consequences which could happen.
May I add one thing on measures?
Yes, Martin and Toby. Yeah.
Because I mean, I may have sounded too soft from what I really am.
No, you never sound soft, Martin.
Okay, it's a great. Thanks. No, so in a sense, I'm quite skeptical in many cases of these behavioral remedies, and it's a very difficult task, and you really have to know it well, and it's typically something which may work well for a limited period of time in very specific circumstances. And I'm a big fan of structural remedies, and that means. And I've been saying that consistently now for quite a number of years. We have had a lax merger control, not just in digital, but in particular in digital. And secondly, and that is actually hidden is in the DMA, even though I'm not sure whether it will be activated at some point, there is also the possibility of structural divestitures. I mean, I think the hurdle to do it is very high. And I think it goes beyond a little bit standard competition policy. In some sense, the question for society and also for European societies is to ask how powerful can we admit firms to be? And I think there the answer could be, at least the answer some people may give, that few of those firms actually are too powerful. They're controlling too many parts of our life. There are pros to it, there are cons to it, but it's a question we have to ask, which goes beyond traditional competition policy. And of course, it has some competition elements, but it's very much mixed with these kind of privacy considerations, the ability to essentially do some parts in life which are not kind of publicly observable for everywhere else. And I guess these are the much bigger and broader questions where I think also that actually competition agency are not the right institutions to discuss it. These are discussions which are to be had, which have to be made in Parliament, and actually in a way in the US some kind of that discussion is going on. I'm not sure whether it's in the right discussion, but at least there is a discussion going on to this extent.
Toby.
I mean, I think so I think it's very interesting to think of this as sort of structural and behavioral remedies. My feeling is that we're talking, I mean, when we're talking about the kinds of firms we want to regulate or we want to control, it's not a great number. And I think if we talk about structural regulation, we would almost we would almost have to automatically go at a very abstract level and say, well, if they have this and this and that, then we will regulate to a certain degree. I think in many ways, because as Aya pointed out, some of the misuse of power may be in very different dimensions than what we will typically think of. I would almost advocate looking at this very much on a case-by-case basis, and trying to curb that behavior, because otherwise I feel it's always running one step behind the firms, and then trying to anticipate what kind of structure would be the ones that we didn't like. So that's kind of my feeling here.
So quick question to David, as you are, basically Tobias is speaking to you. How do you see this? And then also, mindful of time that we are basically approaching the end, unfortunately, of the debate. It will also give, some floor basically for questions from the audience. There are a couple there that just on the, probably on the this problem of distribution. And so probably goes towards the what is fair and fairness concept that Jacques maybe is dear to Jacques, let me put this way.
Yeah, so I can only speak for the situation in Sweden and sort of what we've learned in our work there. And I mean we see that in certain cases some competition problems and some issues that are we know there are risks for on digital platforms, means that the competition law might not be the most effective way to address these. They usually pertain to some sort of structural issue, and we knew before that there were some shortcomings in competition law in that aspect. So something we conclude is that, well, it might be a good idea to look at some sort of complementary tool. We think that if such a tool is to be looked at, one should really be careful one has to be really careful in considering sort of these different business models that we see across platforms. One of the main results from our study is that there's a lot of differences between platforms and a lot of different issues. So one has to take account of that. Yeah.
Can I ask a follow-on question to David? This extra tool, do you think it should be, what would be the allocation between the national and the European level, do you think? How do you see that?
I mean, what we propose only is that it might be a good idea to investigate sort of the need and design for such a tool. In terms of the, and here we only speak about sort of on the national level. We don't really, we do not make any analysis of the DMA. What we say is that, I mean, we think it might be able to tackle some issues that we've come across in our work, but the DMA is targeted to as a minimum of 3 member states. I think we see that some issues might be on a national level, and that, yeah, you might want to consider some national rule for those cases.
Okay, so we have one question there that again, I mean, so goes to the idea of fairness, right? And so is that, say, that basically from Timothy, that tipping might have, might be not a problem if users are fairly compensated, meaning, so the question is Facebook capturing too much profit or not, right? So if there is enough or fair distribution of this value that has been created, is that a problem? Or and then this again, this I guess that it's related to the counterfactual that we've been discussing several times. So compared to what, right? And if we don't address this too, I guess that really, I mean, we can think of ex-ante, ex-post, but we will never fix the problem, right? So because we don't have ways to compare, right, and then make the assessment. So
may I add an example on this, which goes back to the old utilities? Because I also hear this, that it's said that actually we are getting a great deal out of those digital services. And I think I do get a great deal out of it. But what is fair? I mean, I don't think we have a good understanding of what fairness is. I think, tap water, 10 cents a liter would also sound pretty fair. It's just 10 cents a liter, right? But it would be, it's a very different price than what most of us typically pay. It would be, I don't know how many thousands % more of the price we're actually paying. So we see that also with some other stuff, we should not really think about what is the value we as users get out of something and then think, well, if we get 80 or 90% out of it, then this should be fair, right? Then we are seeing quite a number of services and products which are provided in markets where we actually get 99 or even more % out of that. So therefore, I think this, I'm not sure what I should associate with this kind of fairness idea. The question rather is, and that goes back, and so I'm not answering it, it's about the innovation incentives. What we want to have is that there is innovation and there must be some compensation for innovation. So of course, what we are seeing, at least in the early days of the growth of the internet, we had seen many firms failing and they had put money in. This was venture capital money which was burned, and only a few were actually successful. And of course, those successes have to be remunerated at a sufficient rate to have this going. And the question is, do we continue to have it going or not? And I would say it's not a yes or no. It's you have to really look at the areas. If I look at, for example, word processing, which is not really internet based, but at least it's digital to a certain extent. I mean, there I haven't seen much changes. So everybody thought that these Microsoft cases were a big success. Where you look at the market valuation of Microsoft, you look at their margins, it seems that they have a pretty entrenched position. And I was making fun when I was had to write this report for the European Commission that we were forced to deliver our document as a Word document. So I mean, we have here a clear case where there is a very comfortable position of a firm. We still may think it's a fair deal we get, but they make tons of money out of it.
Hiya.
Martin actually brought up one kind of interesting and really important point about the role of VC, venture capital, in creating tipped markets in the first place. And I think that's something that hasn't really been kind of incorporated into the competition discussion, I think, to the degree that it deserves. So particularly the US venture capital market, maybe to some lesser degree the European one, where there's huge incentives to kind of pump up money and market creation and market monopolization power into a small number of unicorns. So unicorns being more than $1 billion worth startup companies. So bringing in tremendous amounts of investor money to try to monopolize a particular market. For example, Uber used a lot of that to try to push out other competitors and buy up market positions in different countries in the world. It didn't work out quite as they intended, but the idea was to monopolize the mobility market with the investor money. And so there's a number of examples. I think Airbnb is another, I think, case that could be looked at from that perspective, and there may be many others. And so what is the role of, how should competition authorities think about venture capital being used to drive up monopolization of markets, and what's too much in that direction? So that's one conversation I would like to see more prominently in these debates.
Thank you. That's an interesting point, because it's been used as a reverse order that dominant platforms kills, right? I mean, the incentives of VC to fund small startups in the first place because of this Death Valley zone. But there is a counter argument that, in fact, I mean, they're actually seeking these dominant firms because for them it's an exit, right, for their own investments. So that's.
Can I just make a quick comment about this? It's very difficult in this case to know whether it's an equilibrium situation. So it's not clear whether or not you are trying to monopolize or you're trying to think, well, it's going to be a monopoly market and I'm trying to prevent somebody else from monopolizing. So if you think that the market is going to be a monopoly, you know, the only thing you can do is fight for monopoly power. So there's a real problem. And just a footnote, I cannot stand the concept of fairness used in the way in regulation, okay? But we're stuck with it. So we'd better think about it and, you know, give it a definition with which we can live, rather than letting it be a floating concept which can be turned into anything we want to. But that's just a footnote, because I think, Carmelo, you said that I liked the concepts. So.
Well, I said it's dear to you. I didn't say you like it, because I know that, you know, you like to make a point about it. And on that note, which I think is a perfect note to end this, because it will, you know, give us opportunity to discuss, you know, these other open issues in the next events. Again, the time is up and it's been a terrific panel. So thank you very much. I also have been learning quite a lot, and hopefully we will continue, you know, in this conversation in the future. So thanks again to everybody, and also to our audience. And soon we will have, as usual, a video. We will distribute it, and we'll also put the papers that we share there in some, you know, the material as a repository. Thanks again. Bye.
Thank you.